developments moving digital assets right now, from regulation and stable coins to custody risk and to where institutional money is quietly positioning. We'll also break down Bitcoin technical analysis, key support, resistance levels, and what price is telling us before the headlines do, because narratives do follow price. Later in the show, we'll be joined by Calvin Tsai. So Calvin is one of the best quant traders in Asia. He specializes in algorithm trading, volatility, and market structure. And while most traders struggle in markets like this, Calvin has been making consistently profitable. So we'll break down how he trades Bitcoin and crypto during high volatility and how he managed risk when markets are unstable and what retail traders completely misunderstand about trading cycles. So it's a packed show. Without further ado, let's get started with the first news of today. So let's get started with the major political reversal out of Washington, D.C. So after days of backlash over the killing of ICU nurse Alex PRETTI, Donald Trump is now scaling back. So Donald Trump is saying will de-escalate in Minnesota, scaling back a federal immigration operation. This is not just a tone change. This is a structural pullback, and it tells us a lot about political pressure is now coming from how far and this crisis has spread. So over the weekend, the administration was in full defense mode. On Monday, that shifted. So Donald Trump softened his language, especially towards Tim Walz, and put border Sir Tom Homan directly in charge. And he also moved to remove Border Patrol Commander, so Greg Bovino. That last move is key. So Greg Bovino had been one of the most aggressive public voices. He claimed without evidence that Alex PRETTI planned to massacre officers. However, video footage later contradicted that claim. Alex PRETTI was just holding a phone, and that backlash, of course, exploded. So between the phone call of Donald Trump and Governor Tim Walz, both sides claimed that conversation was very productive. Donald Trump later said they were now on a similar wavelength. Shortly after that, Minnesota Mayor Jacob Frey also confirmed that. So some federal agents would leave the city. That tells us something important. The White House now sees this operation as politically risky and hard to defend. The real damage happened after the shooting. Senior officers initially said Alex PRETTI approached officers with a gun and he was a dangerous instigator. But videos from the scene show that Alex PRETTI was just holding a phone and being pushed and surrounded by agents. That gap between words and video matters. So the media right now is turning this into a credibility risk. So look at this headline. So Trump administration's trust and credibility tested in wake of PRETTI's death. So when people see the footage themselves, official statements carry less weight. This is no longer a partisan issue. This is pressure from both parties. And now the fight is moving into the courts. Minnesota officials want records preserved and independent investigations, while federal lawyers say court oversight could be micromanagement. So now basically you have the state versus federal authorities, competing investigations and a growing paper trail. This story is far from ending quickly, and the backlash is now hitting Capitol Hill. Senate Democrats are threatening to block Homeland Security funding. So what this means is that would raise the risk of another government shutdown. So the deadline is going to be 31st of January, which means in the coming days. A shutdown that would affect tax refunds, unemployment data, and federal contracts. So this local crisis now has national fiscal consequences. And zooming out, this fits a pattern that we've seen before. So Donald Trump, he has a pattern. So he usually escalates fast. He'll talk really tough and then apply pressure. Then he will reverse under backlash. So just days ago, Donald Trump praised the crackdown. Right now, leadership is reshuffled. Agents are pulling back. So that tells us the pressure is working very well. And not gonna lie, the numbers do matter as well, because like this year in 2026, we know is the midterm election, and Donald Trump cares about this very much. So he cares about the polls, and the numbers do matter. So there's this new poll. It shows that only 39% of American people actually agree with the ways of Donald Trump handling of immigration. So 53% of American people actually disapproved. And that's dangerous territory heading into the midterms election. So the final clean takeaway for this is like what started as an immigration crackdown has turned into a crisis of credibility and political risk. Donald Trump's pullback in Minnesota is not about policy alone. It's about containment. The White House is trying to stabilize a situation that spiraled beyond control. And the bigger question now is, does this become a one-off retreat or the blueprint for scaling back similar operations nationwide? Because once public trust breaks, it's very hard to rebuild. All right, so let's move on to the next story of the day. So TikTok is now under more pressure yet again, but this time it's about censorship claims in the US. So TikTok says a recent problem on its US app were not political. They say it's just a technical failure. So according to the company, a power outage at one of its data centers caused widespread glitches across the app. So what actually went wrong? Here's what TikTok says it happened. So a power outage hit one of the data center, and that outage triggered what the company calls a cascading systems failure. So in simple terms, one problem led to many others. So what users reported is that there was slow loading, trouble posting videos, and features not working properly. TikTok says these were just server issues, not content decisions. Now, here's where it gets really sensitive. Some users claim certain content was being blocked or suppressed, specifically posts related to Donald Trump or Jeffrey Epstein or the immigration stuff. So here is here's a post on Twitter that went viral. So basically, we scroll down to this user's TikTok, some videos about Donald Trump or the whole ICE immigration situation, like there is so the video is being flagged as ineligible for recommendation. So this post went viral, and apparently a lot of users are experiencing that. So of course, that raised immediate red flags online. People started asking, is this censorship or is this something else going on? So on that note, CNBC actually tested this theory, and then they confirmed that messages containing the word Epstein, so Jeffrey Epstein, trigger an error message. However, this is important. CNBC said it could not independently verify broader claims of political censorship. So the evidence so far is mixed. Some bugs were real. The motive behind it is still very unclear. So TikTok response, of course, TikTok is pushing really hard about this. A spokesperson for TikTok's US operations said the platform does not ban the word Epstein, and the company is investigating why some users saw errors. So TikTok also said videos about recent immigration enforcement in Minnesota were available on the platform and have been visible since the weekend. They say content was not removed whatsoever. Right now, the issue has reached state officials. So California Governor Gavin Newsom said his office received reports of suppressed content and confirmed users were having problems. he announced a review to see whether TikTok did violate state law. However, and this matters, Newsom's office did not provide any evidence to support that claim. So right now, this is just a review, not a legal finding. TikTok also add another explanation about this. So they said some creators may temporarily see zero views or zero likes. This, they say, was caused by server timeout, not moderation. So in other words, the videos weren't blocked. They just weren't loading correctly. But at the same time, we really can't blame users for this because this is happening at a very sensitive time for the company. So let's go back to the post on X. TikTok is now operated by the US-led joint venture. Here's the key structure of TikTok right now. So ByteDance right now owns 19.9% of TikTok, while the US and global investors control the majority. So this change came after pressure from Washington over national security concerns. So any disruption right now gets extra scrutiny. TikTok said it's working with a data center partner. The goal here is simple, which is to fully restore normal operations, fix the remaining bugs, and prevent this from happening again. For now, the company says this was just a technical outage, not a censorship. But with politics involved, this story is far from over. With regulators watching and elections in the background, every technical issue now carries political weight. So this isn't just about servers, it's about trust. We'll take a short break from now, and then we're going to dive into more news about Starbucks this time, because Starbucks have been struggling with the AI, with the financials and the supply chain failure. So we're going to dive deeper, look at how the stocks is doing. Is this a good purchase for the Starbucks stocks, or maybe it's time to say goodbye to Starbucks? So stay with us.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to Roxom TV, and thanks for sticking around with us. Let's start with a story that sounds small, but actually says a lot about how hard it is to run a global company in 2026. So Starbucks is dealing with ongoing shortages in US stores. So we are talking about basic items like milk, pastries, and cup lids. And this isn't a one-off issue. It has been going on for months. At the center of the problem is actually the AI glitches. So AI systems that aren't working as planned, and a supply chain that's too complex to fix it quickly. So what's actually going on and what went wrong for Starbucks? Starbucks recently rolled out an AI-powered inventory system. So the goal was simple, is to automate stock counting, reduce human error, and make stores more efficient. But in practice, it's doing the opposite. Employees said that the AI miscount items, fails to detect products on shelves, and mixes up similar items. What that led to? So it leads to wrong orders, misleading products, and empty shelves in busy stores. Some locations get too little inventory, while others get a little bit too much. So this problem shows up at the store level. So barista, what they're saying is that drinks cannot be made, food runs out early, and customers, of course, they'll get very frustrated. And when customers can't order what they want, they will just go to another store, they will leave. That's lost sales every single day. And that's the problem Starbucks is facing right now. Now, here's the part that really matters. AI problems are only part of the story. Like Starbucks have a very fragmented supply chain, more than 1,500 different cup and lid combinations, many small regional food suppliers, very limited standardization. So that makes automation extremely hard. You can't run advanced AI inventory systems if the products themselves aren't standardized. In other words, the tech can't fix structural mess. And here's another problem. Starbucks is running parts of its supply chain on decades-old IBM systems. Employees compare upgrading them to changing the engine of an airplane while still flying. In other words, you can't just shut things down. Mistakes could disrupt thousands of stores, and every update is risky. That would slow down modernization quite a lot. Now, let's talk logistics. In early 2024, fewer than 1/3 of deliveries arrived on time and with full orders. So even when stores ordered correctly, the system still failed. This is why some analysts are actually quite bearish on Starbucks. So Starbucks stocks, is Wall Street bullish or bearish? So what Starbucks needs right now are a full supply chain redesign, fewer product variations, and more centralized sourcing. Otherwise, shortages continued, food waste increases, and costs stay high. AI alone won't save the system. If we also hop on and take a look at Starbucks stocks, for the past year performance, it has been just like a hovering around. So there's a negative 4.67%. And if we zoom out to 5 years, it was just like chops consolidating a little bit, even in the 5 years horizon. But like for the past month, performance is actually up 11%. But this is actually, well, the entire S&P 500 is breaking new all-time high. So it's not like it's not like Starbucks is doing ultrally well. It's just like the entire stock market is going up apart from crypto. So that's why some analysts are really bearish on Starbucks. They need to fix the core issue. So AI is actually not the problem here. This is a systems problem. Starbucks tried to layer new technology on top of an old fragmented supply chain. That, of course, did not work. Fixing this will take time, standardization, and real structural change. As management prepares to face investors, that challenge is clear. Modernize the backbone of the business without breaking daily operations. And that's a hard fix. And the clock is ticking every single day. All right, so here's about like some small stories, but actually the backbone of how the economy is working in the US. Now let's take a look at Bitcoin, because like Bitcoin right now, there's breaking news and it's very concerning. This time is about who is controlling the keys. There is new allegations suggest more than $40 million in seized Bitcoin may have been siphoned from wallets linked to the US Marshals Service. If this is true, it raises big questions about how the US government sourced Bitcoin. So, what are these allegations and why this is so serious? So, blockchain investigator StackXBT said tens of thousands of dollars in crypto were moved out of wallets connected to the US government's issues. That fund were not supposed to move at all, but on-chain data shows they did. Some of that money is still missing. So this is a very serious and very scary question to ask. Basically, who is handling the seized Bitcoin for the US government? This part is key. The custody was reportedly handled by a private contractor called Command Service and Support, also known as CMDSS. So CMDSS was awarded a US Marshals contract in late 2024, and the job is simple. Basically, it's to manage seized crypto, store them safely, and help dispose of it when required. The asset included high-profile seizures, including Bitcoin links to the 2016 Bitfinex hack. So, what set off the alarm of StackXBT? Things escalated after a private Telegram dispute leaked online. So, in that exchange, someone was screen sharing a wallet showing millions in crypto and moving funds live. That immediately raised red flags. So, StackXBT claims that person involved used the name Lake, or John. So, and he alleged that person, so John Lake, it might be John Dakhita, being the son of CMDSS CEO. If true, this points to a possible insider access issue. Because if insiders can allegedly access government-linked wallets, move millions with little detection, then the problem isn't just thief. The problem is custody design. That means weak key management, poor internal controls, and serious conflicts of interest. This matter even more because of scale. Estimates suggest that the US government controls around 200,000 BTC or more, like close to more than 300,000 BTC, some say. At today's prices, that's billions of dollars. So even a small custody failure can turn into a massive loss. The crypto industry, of course, reacted fast. David Bailey, CEO of Nakamoto, warned that the US Treasury should immediately secure private keys. moved them away from the Justice Department and locked down assets. His message was clear: this can't happen again. So zooming out, this story isn't just one contractor. It highlights a deeper issue. So traditional institutions are still learning how to handle Bitcoin custody. Bitcoin doesn't care who you are, doesn't care about like whether you're government or corporation or individual. If your keys aren't secure, your Bitcoin isn't secure. And if these allegations are accurate, US Bitcoin custody systems have a serious weakness. As Bitcoin becomes more strategic, custody risk becomes national risk. This episode reinforced one core rule of crypto: not your keys, not your coins. And that rule applies to government as well. Speaking of Bitcoin, let's hop onto some price action of Bitcoin. Where is Bitcoin going to? So let's do a quick price analysis. So Bitcoin right now is sitting at $88,000. So of course, we're starting with daily candles. We're slowly going to jump onto the weekly and then the 2 weeks. So overall, this is still a bearish pattern. So we have a bear flag forming. So of course, bear flag is another bearish structure we are looking at, and we are about to enter the third stage of bear market. So we are, technically speaking, we haven't broken out of that rising support trend of this bear flag. So we've been building this up ever since 21st of November. Whenever we come close to this support line, we just happen to bounce back. So speaking of like how high we'll bounce, I would say the strength of this relief rally was pretty insignificant, I would say. Like I would expect Bitcoin would at least pump to the mid-level of the bear flag. So that's around 90,000 or 91,000. But the fact is, whenever we get close, so there are 2 or 3 weekly candles, so daily candles. So if we zoom close to the daily candles, there are 3 consecutive green candles trying to get close to 91K. So only one managed to touch that, and then we got rejected very quickly. And looking and judging from the candle alone, this is an extremely weak pump, I have to say. So like we have a strong, basically we open strong and also we close quite weak as well. And then the next day we had a red daily candle. So this is the structure I'm seeing. And speaking of the how low we could go and when we're going to eventually enter the third stage of the bear market, we now have to take a look at the 1 day cycle time frame. So how it works is just like waves. So it's like similar to RSI. So if we get close to 80 on the 1 day cycle time frame, then very likely we're going to have a correction. So Bitcoin, very likely we're going to see the top. So if we zoom out and also if we this aligned with the price action. So for example, here we have the top that happened on 16th of January, and that was a very nice pump. So people thought that we're going to go to 100K. Of course, that did not happen. We only know this in hindsight. So point being, this momentum kind of tell you that, okay, maybe we're getting close to the Bitcoin's top. But like this is, of course, we're looking at the short term. We are on the daily cycle time frame. And same goes with 6th of January and also on 23rd of December. So if we align that with the price action, Bitcoin happens to find its top whenever we reach very close to 80. So 80 is the magical number. So think of it like how it works is a little bit similar to our side. So the point being, okay, this is a daily cycle time frame we're looking at. And then for this to play out the entire wave, it takes like 1 week to play out the entire wave. And right now we're sitting at 80. So in other words, we are getting very close to another correction for Bitcoin. And what I'm eyeing very closely is that, okay, first of all, January, it has been at least we are about to close January. So today is 28th of January. Let's see if we manage to close with a green number after all. Because usually, judging from the pattern, if there are 3 consecutive red months, the 4th month likely to be a green month. So it doesn't have to be a significant number. Right now, it's just like 1.65. But point being, usually going to end up with a positive number. And if we do end up with just like a 1.65%, the relief rally is extremely disappointing. Not gonna lie, like it's so much smaller to the any patterns, any relief rally we have seen in Bitcoin's history. So let's see if we manage to close with a positive month. I do think we can close with a green number. Doesn't have to be significant because this has happened 6 times throughout the entire Bitcoin's history. So 3 red months in a row, the 4th one usually going to end up with a positive figure. So coming back to the cycle time frame, so 1-day cycle, since we are topping on the 1 day, so we're getting close to 80, possibly going above 80. So in other words, I'm anticipating that the final pump might happen on the towards the end, so very end of January, and then we're going to officially enter to the 3rd stage of bear market. So because this has to come down, and we're going to eventually lose this rising support once and for all. Like when I say once and for all, I mean this bear cycle. It's not like Bitcoin going to zero. It's not dumb like that. Okay, so let's go to the weekly candle for now. So slowly building up that time frame and looking, judging where Bitcoin could possibly go to. So Ichimoku Cloud, that's another leading indicator. We are on the edge of breaking below, like technically speaking, but this weekly candle, we haven't closed it yet. We're going to close it in basically on Sunday, so we're going to have a fresh candle every Monday. So there's still a few days to come until we see this is indeed losing the leading span B, and if so, the rest is history. Because like looking at the pattern from the 2022 historical pattern, we stayed there for 3 months, and then eventually we lost the leading span B. So being the pink line at the bottom, so that was a losing that, and then we found a bottom at 15.6k, somewhere around that, depends on what exchanges you use. So that was another 60% reduction. Though being said, like, okay, Jamie, you're saying, okay, are we going to be, there's so much pain for us to come, so Bitcoin will lose another 60% from here. That's not what I say, because what this showcases is that Bitcoin is slowly maturing. So people like to say this is a super cycle, the cycle is different, 4-year cycle is no longer intact. Now, in a way, it's true, because what we have seen from this progression is that the return is getting slow, like smaller. So we have diminishing return in effect, but also what we've seen is the drawback of Bitcoin prices diminishing as well. So this is a good thing, I suppose, because we are maturing and institutions are here. So basically, first week of February, that's the time that I'm watching very closely, and more bearishness for you guys, because that so far is what it has been reflecting to my chart. So if we zoom close to the 2-week candle, so right now what I've got here is the 50 SMA, of course the 50 SMA on the 2-week candle. So one thing very, very bearish, and it signals to me there will be more pain ahead, is that the 50 SMA, we continue to touch week after week. So 1, 2, 3, 4. Okay, this doesn't count, but 5. We haven't closed this 2-week candle yet. We're going to close that next Monday. So if we close below this blue line here, so wicking is fine. So we have been wicking and touching for 4 2-week candles already. But like if we close below that signals a deeper or more painful bear market ahead of us. So how it works when it comes to support line and resistance line is basically the same. So when we keep touching the same level over and over again, so when it comes to here is the support, so if we keep touching the support line, the support would get weaker. Vice versa, if we keep touching the resistance line, that means the resistance will get weaker. So there's like structure so more favorable towards the bull. So this is how you read the charts. So not only this, okay, we've talked about the monthly return. If we also hop onto the Bitcoin spot ETF net inflow, so far it has been like a lot of redness. So there are more outflows. So starting from 16th of January, so 1, 2, 3, 4, 5, so 5 consecutive days of outflow, and then 27th, so which means yesterday we have outflow again. The reason why we focus a little bit more on the ETF side, because a lot of institutions happen to buy ETFs instead. So institutions getting into the market, that means the bags or the purchase power is so much bigger than retail. So we were looking at BTC term, and let's hop onto USD now. So in a past day, so 27th, we had a $147 million outflow. So, and if we go to 21st, the figure got even more insane. So $708 million outflow in a Bitcoin ETF. So this is really concerning, and also why I do think so far the fact in front of us, everything favors the bear a lot more compared to the bull. So that's the overall sentiment I'm getting from the charts. Let's move on to some crypto news. So let's talk about stablecoin, because there's a major moment in the stablecoin war. So on 27th of January, so yesterday, Tether, the issuer of USDT, announced a brand new US dollar stablecoin called USAT. This is Tether's official return to the US market after stepping back in 2018 due to regulatory pressure. And make no mistake, this is a direct challenge to Circle and USDC. So what is USAT? Let's keep it simple. So USAT is US dollar-pegged stablecoin fully backed by dollar reserves and issued under US banking rules. Unlike USDT, this one is designed specifically for America. So Tether is calling it homegrown, fully compliant, and regulator friendly. This is not offshore crypto. This is Wall Street style crypto. And this is basically Tether's way of staying competitive in the US soil. Globally, of course, USDT is massive. They have about $186 billion in market cap. But in US, the number is down significantly. That space belongs to, so in US soil for stablecoins, that space belongs to USDC, around $71 billion. USDC is favored by institutions, used on regulated platforms, and deeply tied to banks and payments. So USAT is Tether saying, we want that market back because we were never loved in the US. This is history here. So like why USDT was never loved in the US. USDT was issued offshore, faced reserve transparency issues, and paid a $41 million CFTC fine back in 2021. Even though USDT works, US institutions prefer USDC because audits were clearer, regulation was cleaner, and risk looked lower. And having a new stablecoin like USAT is meant to fix that perception. So the next question people are asking is that, will banks and exchanges support USAT? So this is, of course, a big unknown. Some challenges, like of course, it comes down to banks may see USAT as competition, not to mention the biggest exchange in the US right now. So Coinbase still strongly favors USDC because they have a little bit of conflict of interest. So whenever USDC make revenue, 50% would go to Coinbase. So that's why it makes sense for Coinbase exchange to push USDC instead of USDT. Adoption for USAT would depends on like exchange listing, payment integrations, regulatory green light. So if there are common apps that being used in US soil and American people are very used to that app, and if there is a USAT stablecoin adapted to it, then maybe the chances of adapting or USAT growing would be a lot higher. Of course, this does not flip overnight. Personally speaking, I'm liking how strategic Tether is when it comes to US market and its global market. USDT is global, is very popular in emerging markets, in trading and DeFi platform as well, while USAT focus on US institutions compliance. So basically, there are two different products and two types of audience. So for the clean takeaway for this news, like this is not just a product launch. This is a strategic pivot. Tether is saying we're done being outside the system, like we want in. USAT legitimized Tether in the US, escalates competition with USDC, and pressures regulators to move faster. And a real winner between the stablecoin wars would possibly be us users, because now we get better transparency, better rules, and better stablecoins. All right, we are going to take a short break here. When we come back, we are shifting from headlines to execution. Joining us live is Calvin Tsai, one of the best quant traders in Asia. While most traders struggle through the market downturn, Calvin has continued to make money. So we'll break down how he's reading the market right now, how he manages risk during volatility, and what most traders get wrong when conditions turn rough. So stay with us. We'll be right back.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my Quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
At the tone, please record your message.
Welcome back to Roxom TV, everyone. So today's show is a special one. Crypto markets have been brutal and volatile. While most traders got wiped out last cycle, some people actually made money, and a lot of money we're talking about. So today we're sitting down with one of them. Joining me live from Hong Kong is Calvin Tsai. Calvin is a veteran quant trader with over a decade in prop trading and hedge funds. He's topped major CX leaderboards and is often called the godfather of Asia quant trading. So if you were on X in October 2025 last year, you probably remember this. So Calvin posted that he got liquidated, and turns out it wasn't a full story. So today we're going to unpack what really happened, how he traded through 10th of October liquidation day, and how quant traders survive chaos when others panic. So Calvin, welcome to the show.
Hi everyone. Thanks for having me. Yeah, it's really my pleasure.
Yes, it's great to have you with us today. So since you and I, we know each other on a personal level. So you actually told me in person that during the 10/10 liquidation day, you were fine. But could you walk us through the background and how did you get it from here? And basically, how did you get into quant trading and why crypto, basically?
Yeah, okay. Actually, let me give you some of my background information for you. For example, actually, I've been in this industry for more than 10 years. I've been working in some of the prop trading firm. Before I graduate, I was graduated in HAU. And then I worked in some of the hedge fund before, some of the quantitative hedge fund. So actually, I have been trading stocks, including US stock, Hong Kong stocks, and also A shares, equities, for more than 7 years. At that time, I also trade traditional market like commodities, for example, gold, silver, crude oil, all kinds of commodities, you name it. And then in around 2017, at that time, one of my university friend, he asked me if I have ever heard of Bitcoin before. At that time, I really haven't heard of it before. So I just Googled it. And after several hours of research, I found it quite interesting. And then I bought my first Bitcoin in 2017. I remember that time was summer. The price was around 3,000 US dollar. Yeah, and then just around 6 months, Bitcoins jump up to 20K. Yeah, I thought, wow, I was God. I was really godfather in Bitcoin. And then, but after, in 2018, Bitcoin went back to 3,000. It's just the starting point of my buying price. And then I just hold Bitcoin for 3 years. And in around 2020, I tried to replicate the strategy from traditional market, like stock market, commodity markets. I just replicated strategy directly from traditional one into crypto to see if it's more profitable or not. And then I found it much more profitable because I guess the market was much more inefficient at that time. And then lots of retail in the market and not many competitors out there, not many hedge funds are into this market at that time in the year of 2020. That's why from that time I keep putting more effort, more time, and more money into crypto market. That's why I've been trading crypto and managing a hedge fund, crypto hedge fund, quantitative hedge fund since then. Yeah, so I've been trading for 5 years. And the reason why I post on X said that I've been liquidated is that because most of the media out there, they're really annoying. Usually when the market like drops like 5%, 10%, they just text me, they just call me and ask if I was being liquidated or not, how much loss I've been taken. Yes, so and so. So I just feel annoyed, and then I just told them, yeah, I've been liquidated. Yeah.
Okay, so for the viewers out there who are interested in knowing about the post on X, so here's basically the screenshot. So we could put that on the TV a little bit. So let's get back to your background, because from what you just told me, you kind of pivot from TradFi into crypto. So I wonder what sort of like mentality that will set you off stone, because okay, maybe TradFi taught you something that you found it really helpful when it comes to crypto trading or Bitcoin trading.
Okay. Because I'm a quant guy, so I'm really number driven. So I just check out for example, I do a lot of backtesting. Backtesting means that you use the historical data to check whether a strategy is profitable or not. Usually we use 5 years or 10 years stock data or history. And then at that time, I just replicate strategy. Just now I mentioned replicate strategy from TradFi into crypto. For example, in TradFi, I've been trading for 7 years in around 2015 to 2021. Usually the annual return I got is around 20% per year. Very stable, like 18, 22, 20, 21, something like that. But for crypto, I just tried backtesting, and the results told me the annual return could be up to 100% or 200%. Because I'm a more number guy, so I trust it. I just put some money into it, for example, $100 to start, and then scaled it up from time to time, and then it's really profitable. So in the past like few years, the average annual return I got is more than 100% per year since 2021. So if you ask what's the reason, why is that? Why is it's more profitable than the traditional market? Because if you study in, for example, economy or finance in university, the first lesson they always teach you is the efficient market hypothesis. It means that if the market, there are lots of people retail trading the price, but they don't know where the fair price is, and there are not many other like strong competitors. For example, hedge fund, PhD, Quant, or like people from physics industry or people from mathematics industry. Not many competitors out there. Therefore, people don't know the fair price, where the fair price is. So the fair price is not the market price. Therefore, you have the room to profit from the fair price, between the fair price and also the market price. We call this kind of situation inefficient. So at that time, like 2020, the market is really inefficient. That's why I put more money into it. I put more effort into it to trade, to profit from the market inefficiency. Yeah, this is the underlying reason why at that time I thought Bitcoin is more profitable, and it turns out it's really the truth. Yeah.
Yeah, just to give some numbers to our viewers out there, because we are on Calvin's X right now, and this is literally on your wallpaper. So Calvin Choi, welcome to the Big V's. In 2021, your account reached an all-time high of more than $5 million. So that's why people call you Godfather of Asian quant trading. So I wonder, how do you see it that way? Like, what do you think of that?
Usually, Godfather, the name of Godfather is usually named after someone is died, right? It's dead, right? So I would rather like become Godfather maybe 50 years or 80 years later. Too early for me now, I think.
Yes, okay. Since you are such an expert when it comes to trading crypto, or basically all assets in the world, like when it comes to real estate or I don't know, gold, because like I talk to you from time to time, and then your analysis goes really deep. So I kind of want to ask about the market structure and how you view the market right now, because Bitcoin is kind of going nowhere. People say that we are in a bear market already. So what actually caused this crash, in your opinion?
Okay. According to the 4-year cycle, because we always hear the 4-year cycle of Bitcoin, is derived from the Bitcoin, the reward halving mechanism. For example, the first halving happens in 2012, and then the next year, 2013, is a bull market, and then 14 was a bear market. The second time halving is 2016, and then 17 is a bull market, 18 was a bear market, and the third time is 2020, third time reward halving. And then 21 it was a bull market, 22 was a bear market. So using the historical pattern, we could derive that 2024 is the fourth halving. It really happened in April of 2024. And then 2025, everyone expected it to be a very bullish market. That's why people thought the target price could be like 150K or 200K. But it turns out the top it was happened like 126K in October around. And then, so why is that? Why the 2025 is not a bull market? I think the 4-year cycle is fading away. It's not really. It's not. It won't be very consistent. Maybe after 10 years, because Bitcoin market become more mature and market cap is bigger, much bigger than before, and market participant is not. It's quite different. For example, you know, the spot ETF rolled out in the 2024 January, and then a lot of traditional like market participant players, big hedge fund, big quant fund, big prop trading firm, they came into the market. So the structure changed a lot. And also people thought that 2026 is going to be the bear market according to the 4-year cycle. So they try to sell the Bitcoin earlier than others. That's why they rushed to sell the Bitcoin in Q4. That's why you saw that in last year, like November, December, market drops like 35 to 40%. That's why it is earlier. It realized the bear market in 2026 earlier into 2025. That's why I think the market is correct enough already did a correction enough. 30 to 40%. Some people ask me, Bitcoin history, according to Bitcoin history, usually it goes down. It went down like 80%, 90%. For example, 2014, 2018, 2022. In this kind of bear market, like bear year, Bitcoin went down 80% plus. So why do you think? Ask me why do I think that Bitcoin just correct 30 to 40% is enough? Because we checked one of the quantitative figures called realized volatility. It measured one standard deviation of the volatility throughout a year. For example, if you talk about traditional market like stock market, US stocks, we always look at the VIX, the volatility index, or people would look at would call it like a fear index. Usually the index is around 20%. That means that the annualized realized volatility is around 20%. So usually it will go up 20% in a year or go down 20% in a year. So if you look at Bitcoin, annualized volatility or realized volatility is around 100% in 2021, 80% in 2022, 60% in 2023. So now the realized volatility keep going down. That's why usually the correction would be gradually going down as well, because the upward momentum and downward momentum, usually they are symmetrical. So that's why I think Bitcoin in this kind of market, the realized volatility being like 30 to 40%, correcting 30 to 40% is already enough for Bitcoin. That's why I think 2026 is going to be another bull year instead of bear market year. So I kind of think of the 4-year cycle is going to fade away. Yeah.
Yes, so you brought up the self-fulfilling prophecy a little bit, because like you mentioned, everyone is expecting a bear market in 2026, but now that institutions are in, basically the big guys are in, maybe the 4-year cycle is not as maybe efficient as compared to any cycles before. So like one thing I want to pick your brain about is like, okay, for the shows that we're doing on Roxom TV, we do TA every single day. So one thing I find it really intriguing is that if we happen to measure from the cycle bottom date to the cycle top, like we get a magical number of 1,064 days. So if we stretch that out, so measuring from the cycle bottom of 15.6K for Bitcoin during 2022, we will stretch that out to a magical date of 5th of October or 6th of October rather. So that's exactly when we saw the cycle top. So do you think this is basically a coincidence, or the 4-year cycle is still intact? It's just like slowly fading away very slowly every single year.
Usually for a very like immature market, usually you will see this kind of very like coincidence pattern in a very immature market. But after a market being more mature when time goes, usually this kind of pattern would fade away. And also in terms of if you talk about statistics, usually we are very stressed on the emphasize on the sample size. Usually sample size should be about like 30, 40. So this kind of sample size, I think at the end is like 3 to 4. That's why for Quant guy, we won't kind of believe this one. We think that it will fade away soon. Yeah, it won't continues to happen like in the future 10 years or 20 years. Yeah, it's too magical.
Yeah, so one thing very interesting is that, okay, we saw the cycle top on 6th of October, and then on 10/10, there was a massive liquidation date. So the official number is $19 billion got liquidated. Like you and I both know the actual number is going to be a lot bigger than what the official figure throw out, right? So I wonder, like, okay, most traders got wiped out, but you happen to make money. So how did you profit during that chaos?
Okay. Usually lots of retails, they will be liquidated during this kind of correction, because lots of retail, they just use the perpetual contract to do leverage, for example, 10x, 20x. It was much more serious before, because CEX, like 10 years ago, they allowed retail to like set the leverage up to 200x or 500x in some of the CFD platform. But now it's limited down to 100x below. Already, I think the scale is not really big comparing to the past like liquidation. For example, I could name some very, very huge liquidation happened before. For example, 2020, March 12th, and also 2021, May 19th. These kind of liquidation, they're much bigger and huge. But you see some you saw some of the media, they said that the liquidation is largest scale, okay, the largest scale comparing to the past, because they just look at the absolute amount, the 19 billion, okay. But you have to compare it to the you have to do the debase, you have to compare it to the market cap, because like just now I mentioned 2020 March 12th and also 2021 May 19th. At that time, Bitcoin price was just maybe 10K. I remember it was 8K in 2020 March 12th, and also 65K in 2021. But now it's like more than 100K. It happens. It was happening in about 100K. That's why you have to divide it by the market cap of Bitcoin. So after some of the calculation, the percentage of the market cap liquidated was not that huge, was not that serious comparing to the past few years. That's why I don't think you should just look at the absolute amount, because a lot of media, they don't do the calculation. They just okay, look at the amount and then said, oh, it's the biggest, and then put it in the headline. Yeah. So and also at that day, really there are some of the retails, they got liquidated because they have leverage on the perpetual contract, and also some of the people, some of the professional like investor, they also got liquidated because they were doing the cross market arbitrage, because they have to put money across several like CEX, for example, Binance, OKX, Bybit, and then from time to time they have to rebalance their portfolio because they do the arbitrage. They just, for example, do the basis rate arbitrage, funding rates arbitrage, cross market arbitrage, or calendar spread arbitrage. They have to just transfer money from one account to another. But at that night, I remember around like 3 a.m., 4 a.m. Hong Kong time, Binance API, some of the users, they experience errors in the Binance API. They could not use the API to, for example, send order or send a stop loss order or transfer money. That's why some of the users, they got liquidated, because they could not transfer money from other exchange into Binance or from Binance to other exchanges. That's why on that day, retail suffered. For example, high leverage retail suffer, and also some of the trading firm trading like cross exchange arbitrage. But for example, for me myself, I'm not doing cross exchange arbitrage. I just do the style is called CTA. CTA means trend following, or we are just directly profit from the direction. We do the prediction, for example, 12 hours or 24 hours later, using multi-factor, multiple like time frames. I just trade on a big cap coin, for example, Bitcoin, Ethereum, and also Solana. I don't trade like odds. So at that day, a lot of odds they went down for more than like 80%, 90%. So some of the retail they told me, some of like, my friend told me they got liquidated because most of their portfolios were on the odds instead of the big cap coin. That's why I always educate and stress on the importance is that you have to allocate your capital according to the market cap instead of the potential you think. For example, retail they always put a lot of money on the odds because they think Bitcoin could not go up 100 times, but odds there are some of the some like kind of probabilities they could go up 100x or 1000x. So yeah, that's why I could still profit and on that day. Yeah.
Yeah, speaking of altcoins, that's a really good segue, and then I'm gonna pick your brain about altcoins right now, because like ever since 2021, arguably speaking, we haven't seen an alt season since 2021. Do you think altcoins are coming back, or just gonna be the big assets like Bitcoins, Ethereum, Solana, or gold and silver?
Okay, I think altcoin coming back, the chance for altcoin coming back is quite low, I would say. Still, I would say the main role or main focus is on Bitcoin itself, because in 2024 January, the spot ETF rolled out, and also a spot Ethereum ETF rolled out as well. But a lot of altcoin they just filed the document to SEC and asked for listing on Nasdaq, but they probably failed. And I don't think the altcoin or a lot of altcoin could maybe issue their ETF soon in the US market. So still the market. I mean, main focus is still the traditional money coming into the crypto market, because there is still a lot of room for them to adopt Bitcoin. If you compare the stock market cap and also Bitcoin market cap, is around 100x difference. So there is still a lot of room for traditional market to, for example, big players, pension fund, or like maybe a lot of long bias or long only fund to buy Bitcoin in the future. So I think it's still the main role. I mean the main focus is Bitcoin itself. That's why in around 2024 January, I post on X several times that altcoin season is not coming back. I asked everyone to focus on Bitcoin itself, and me myself is also trading Bitcoin mainly. I didn't really focus on altcoin. Yeah, so altcoin, I don't think there are hope. Yeah.
Okay, since you think altcoins there are no hope anymore, so do you think a good trading strategy for now may be shorting altcoins since the market is on a crashing?
Okay, but after October, like 11th of October, the altcoin market has already dropped a lot. So if you ask this question before Q4 last year, then I would say yes. But now I would say some of the altcoin is also manipulated by some of the VC fund and also market makers. If you try to focus on the market participants of different kinds of altcoin, some of them are very, like we call it, very dry or very concentrated. The portion is concentrated on some of the like project founder, or some of the VCs, or maybe just one market maker controlling the whole altcoin, the whole altcoin circulating amount. So it's very easy for them to squeeze your position out. Some of my friend they try to short the altcoin because they're like me. They're Bitcoin maximalist, or they believe in big cap coin. They believe in traditional market adoption of crypto. So they try to long the big cap coin and then short the small coin or altcoin. But some of the position got liquidated because the market makers because there's just one market maker, so they could easily spot your short orders. Yeah, for example, they see, okay, someone is shorting the coin, I just squeeze it. I just pull the price up. Yeah, so it's not really as wise or smart action to short a altcoin, but to buy Bitcoin, I think is a good move. Yeah.
Yeah, I mean, personally, I'm missing the altcoins season back in 2021. Like, I could literally close my eyes and then get a 50x return easily without any questions asked. So speaking of like shorting altcoins, like okay, going back to you, your friends got liquidated on your altcoins position because they are Bitcoin maxi. So what about like pooling, basically shorting altcoins with no leverage? Do you think that will work in markets like this?
That's a good question. But because, for example, in crypto market, the price could go up like 500%, but the downside is just 100%. So mathematically, it's not that symmetrical. The return is not that one-to-one like a stock market. But why in stock market the return is much more symmetrical because the volatility is much lower, and also the market cap is I mean the stock market, traditional market cap is much bigger. That's why it's more stable. But for altcoin, it could just go up 100%, more than 100%. That's why the reward to risk ratio, which we are very focusing on, is not really one-to-one. Yeah, that's why even you are not doing like leverage, for example, you use $100 to short the coin, but if the coin jump from $1 to $5 to $10, you have to keep putting money to keep transferring money into your account.
Yeah, you brought up a really good point. Like the return on investment is not making much sense for shorting altcoins because when altcoins move, it can move really quickly. But like, okay, speaking of different assets groups, so we talk about Bitcoin, we talk about altcoins, and I wonder what assets that we should get into right now. Okay, as you mentioned, like Bitcoin is maturing, is being played by the big guys, institutions are here. That's why the 4-year cycle you happen to think is fading away. So for a retail or general public who is watching this episode and they haven't got like a huge bag of bag of money for them to invest, like what sort of assets that you advise them to maybe look into, maybe do a little bit more research? Because recently we saw gold and silver keep breaking new all-time high. So what's your take on different assets group like that?
Okay, I could share a bit some of the like asset allocation of myself. For example, I focus on trading a lot, focus on a quant strategy a lot. That's why I have around 50% of my portfolio in USDT, USDC, because I have to use the USDT, USDC to be as margin to open my position on contract on, for example, on Bitcoin, on Ethereum, or on Solana. That's why half of my portfolio is trading on quantitative strategy, which is I'm good at. I think myself, for example, like past 5 years, I'm keep working on this one. And then 25%, 1/4 of my portfolio is holding big cap coin like BTC, ETH, and Solana. And then another 1/4 is I would call it alternative investment. For example, in that part, I have a lot of asset class like stocks. For example, US stocks. I have commodities. Some of the some percentage is allocated into gold. Some of them is allocated in silver, but it's not a lot. I just try to trade the momentum after last year. I didn't buy. It was a pity that I didn't bought it. I didn't buy it in last year, like around 12 months ago. So I kind of missed the gold, the bull run of gold and silver. And also in that part, I've like real estate as well. And for example, very interesting alternative investment like whiskey, wine, yeah, so and so. Yeah, so I would say, if you ask me, what's the like the bull where is the bull market is, I think it's still the Bitcoin is a good one. And also if you see comparing Bitcoin price and also the gold price, Bitcoin is kind of underperforming gold. And if you look at the percentage of Bitcoin market cap over gold market cap is around 5%, 6%. I think in the future it could go up to maybe 10% or more. If it is really the case, Bitcoin could already go up to 150K above. Yeah.
Okay, so you just mentioned the pairing between gold and also Bitcoin. So another pairing that is even crazier is silver with Bitcoin. So silver in terms of the pump is actually even bigger than gold. So I wonder, like based on that theory that you just mentioned, do you think like swapping from silver to Bitcoin is actually more rational for the time being?
Yeah, I would say that. Yeah, I kind of agree. with you, because for example, traditional market, they always do the exact rotation. They would do allocation rotation from time to time, for example, quarterly rebalancing their portfolio or monthly rebalancing portfolio. So I think it's kind of time for them to rotate the money from gold and silver into Bitcoin. But we won't, of course, we won't know it really happens maybe in February or March or April. But I think it will be going to happen in this year because most of the hedge fund, I know they have internal protocol. For example, if they have a lot of profit in one asset class, they have to realize the gain before they like a quarterly report or like semi-annually report. That's why they have to do the rotation from time to time. And maybe some of the fund, they just bought silver and gold since last year Q4. Then probably they would try to do the rotation after March, maybe in April. So I think still buying Bitcoin in this price is a good move instead of chasing the bull run of gold and silver, because if you look at the technical analysis, they're already very overbought. And also if you compare it to the historical return of gold and silver, on average they're just achieving like 10% per year, but last year is really a crazy year, the record year over the past 30 to 50 years. So statistically, it's really an outlier already. So I would put a bet on a reversion of gold and silver.
Yeah, that's a really good point. And since silver is like keeps breaking new all-time high, we happen to have both sides of the argument. So for the bulls is that, okay, they're feeling the FOMO. There are actually a bunch of people lining up in Hong Kong trying to purchase a bar of silver. So the FOMO culture is really strong here. But for the bear side of things, they are pointing out that, okay, there is a narrative going on for silver, which is AI. So some part of components require silver for the AI building, but there's also the bear is saying, okay, that component could be switched to other materials as well. So speaking of the utility of silver, what's your take on that?
Okay, I think it's still the bull run of silver is more chasing the gold move. Usually, we will see a lead lag relationship between gold and silver, and a lot of hedge fund they're trading a relative relative value between them during the pair trade. For example, they derive the gold price by silver price to check the price ratio, and the price ratio is going like up to 2 SD, 2 standard deviation. They just short gold and long silver. So they're doing this kind of quantitative trade between them. I think because I'm a quant guy, I'm more believe in the mathematical calculation more than the narrative. Because for narrative, it's really hard for retail to chase them. Today you heard of this narrative, tomorrow you heard of another one. Just like you mentioned, silver could be the material of AI, and then tomorrow you switch to another one. So it's really hard for retail, especially retail who is not a full-time trader or who has maybe they have their own job, day-to-day daytime job, and then it's really hard for them to chase the news and also the headline. I would recommend people to do the quantitative trading and using like automated tools for you to do the trade. Yeah. So me myself is not a macro or narrative guy. Yeah.
Yeah, you're 100% a math guy and a data guy, because like I know you happen to put a lot of data on the spreadsheet for absolutely every single thing in life. So like one thing interesting you mentioned like about data. This is a question I get a lot personally from my community, from the viewers on Roxom TV as well. So I do technical analysis, but like people like to kind of like criticize a little bit about TA, saying that it's a little bit like reading tea leaves. You might as well just look at the sky and predict the next move of BTC or basically any asset. So in your own opinion, or maybe in your own back testing, like does does TA work?
Okay, yeah, TAA is really the first first or second lesson people when people learn how to do investment or trading. I believe the first book they read is TA or maybe the FA. Both FA and TA are first two books that when someone want to get into the trading industry, they will try to investigate or try to research on it. I really spent a lot of time reading TA books when I was in secondary school. Yeah, at that time I tried to read all the TA books from a bookstore, from library, and I really did that. I really read all the books from that, and so that's why, including the technical indicator, technical patterns, candlestick pattern, yeah, I was really like familiar with them. And also, I'm really curious. I asked myself the question you just asked me when I was 18 years old. That's why I pull all the data from the internet, for example, US stock data, Hong Kong stock data, and try all kind of technical analysis on them. For example, RSI, Bollinger Band, MACD, moving average, crossover, moving average. I just put all the technical indicators on all the stocks, and I try all kind of parameters. For example, usually we look at RSI, we look at 14 days RSI, we look at 20 days Bollinger Band with 2 SD, we look at 10 days, 20 days, 50 days moving average, and then I just let the computer to run the backtesting to try all the combination of the parameters and all the TA. And then I discovered one thing. Okay, this is the truth. If the underlying asset, it is really it itself is momentum. Okay, like Bitcoin in the past few years, for example, 2021, 22, 23, usually it goes up like 50%, go down 30%, go to 50%, 30%. Very, very big volatility, very high volatility, big ranges. In this kind of market, if you just put a momentum indicator on that, you could profit. It's very easy. But if you look at, for example, if you look at an underlying which is just range bounding, or the range is very small, the volatility is very small, it's not going anywhere, just a flat, very, very flat. In this kind of situation, if you put momentum indicator on that, you're not going to profit from that. So this is my biggest takeaway from all the TA books and all the TA research I've done before. Yeah, this is what I've learned in the past 10 years. Yeah.
So right now, when you're doing analysis, do you incorporate TA into that part of that reading as well, or you just like throw it to the computer, to the Quant, and basically the algo will trade everything for you?
Okay, we have to dissect TA down. Where TA is from price and also volume. Okay, all kinds of like candlestick pattern, candle like bars, or maybe technical analysis, technical indicator. They are all just come from the raw data, including the price and also the volume. So in my system, of course, I will incorporate price and volume into my quantitative strategy, and but it's just part of the whole system. It's not. People always thought that quantitative trading or like automated trading equals to TA, but it is not really, is not the truth. Not the truth. It's just part of them. You could input more than that. For example, you input, just like you mentioned, the sky, the moon phase, and also temperature, the humidity. You could input all kinds of data into your system to do the quantitative trading. So price and volume is just some of the factors you have to focus on, okay, but not all the big picture. For example, if I trade Bitcoin, or if I want to predict Bitcoin price, I would input more like data in instead of just price and also volume. For example, funding rate, for example, the ETF fund flow, for example, the open interest, for example, how many people are mentioning Bitcoin on X every day, the keyword search, Google trend, grid and fear index. Yeah, I would incorporate all kinds of data into the system, and also on-chain data, because for blockchain we have a lot of data, very transparent data, like whale movement, retail movement, whether miners, they are selling their Bitcoin a lot, how much money the miners are profiting, or like the cost of mining the Bitcoin. I would put all kinds of this kind of data into my system. So not just price and also volume. Yeah.
Okay, one thing I'm a little bit lost right now. Since you put basically all the data you could have found in this entire world into the Quant, into the algo. So, like, how does it differ from AI trading? Is it like more or less the same?
Okay, AI is one of the approach that we could use in quantitative trading, or in like algo trading. Quantitative trading means use mathematics to trade, use statistics to trade. Algo trading means you use the computer to do the automated jobs for you. And AI means that you have to use machine learning or artificial intelligence like LM model. So some of the like fund, they just focus on quant trading and algo trading bit, but they are not using AI. They just use a very simple rule. For example, just now you mentioned TA. I could just ask my computer to do the moving average crossover calculation for me, and also maybe the MACD calculation for me, Bollinger Band calculation for me, but which does not involve AI in it. But some of the firms, they use AI 100% because they just input the raw data, for example, Bitcoin price into the machine learning model, and the machine learning model, they just generate a signal, recommend you to buy or sell Bitcoin tomorrow. So there, if you are doing automated trading, you could just use a very simple mechanical rule, or we call it human rules, or you could use it just directly input into AI to generate a signal for you. So AI is one of the methods that we would adopt in quantitative trading, but it's not a must. It's not a equal sign. Yeah.
So I wonder, have you done any back testing for AI trading compared to the algo trading? Because so far, I've heard a lot of people saying AI trading is not mature enough for you to make money. Like, have you personally tested out yet?
Yep. I tried using AI, using machine learning to generate signal for me already back in 2021. But at that time, it was not really working well. Most of the strategy or most of signal it recommend, it seems very good in the backtesting, but in real environment, in production environment, it just go down. So in statistics, we call this kind of situation overfitting. That means it gives you a false hope in the historical data, but it turns out it could not really generating any money in the real trading environment. But I keep trying using machine learning to generate the signal for me, like 2022, 23, 24. And then I observed a very interesting phenomenon is that it becomes more and more profitable from time to time. I guess it's the reason of self-actualization. That means because AI like ChatGPT rolled out in 2023, so people focus more on AI, and more firms, more and more participants in the market, they try to use AI to generate signal. That's why they kind of self-actualize the result. Because at first, like 2021, no one using it, so that it doesn't work it doesn't work at all. But after several years, people are trying to use the same tools together. For example, AI recommend you to buy Bitcoin, and recommend me to buy Bitcoin, and recommend some other people to buy Bitcoin, and then we buy it together. Okay, that's why the price could go up. We call it self-actualization. So in 2025, I incorporate more and more machine learning strategy into my portfolio, but still it's not 100% generated by machine learning, because there some underlying issue is that if the machine learning model, they could not profit anymore, it's kind of black box. You cannot know what is the underlying reason why the AI think in this way. You could not correct them. So I would rather, like 50% of my portfolio is generated from very simple rule, and 50% of my portfolio is trying the new stuff. For example, generate the result from ML model. Yeah.
Okay, obviously you're very advanced when it comes to analyzing data, algo trading, and now trying to incorporate AI into your trading as well. But like for our viewers out there, if after this episode they're very intrigued to learn more about how algo trading works, basically trying to have a skin in the game, like what are the first few steps they could do, or basically get advice from you, like from a beginner perspective? Maybe take a step back and for beginner friendly terms.
Okay. If you try to get into like quant trading or like AI trading, machine learning trading, I think it's much more easier for you to do this than 3 years before, because we have now a lot of LLM model like ChatGPT, Gemini, DeepSeek, Grok, Claude. A lot of this kind of like LLM model is really, really useful. Some of the time I don't want to do the coding myself. I just ask them to generate a simple code for me. And then of course you have to know how to do the coding as for you yourself, because you have to know whether where the bug is, or how to correct them, or how to fix the error. Okay, but you cannot 100% rely on the script generated from LLM model. You have to know, like for example, Python, or you have to know C++ yourself. But it really helps a lot if you ask them to generate the script for you. Already save you a lot of time. Before, maybe I have to do for example, if I want to build a strategy, I have to spend like 3-4 hours or maybe for a day time to write me a code. But now I could just ask them to generate according to my idea, and then I could get a code, for example, just 5 minutes, 10 minutes. So it really helps a lot. Yeah, I think this is what maybe newbie or beginners should start from, is try to chat with the bots, chat with ChatGPT, and ask them to guide you step by step how to build a system or how to build a quantitative strategy. Yeah.
Yes, that is really good tips coming from Calvin. Unfortunately, we are towards the end of the interview. So if our viewers want to get to know more about your perspectives about the market, or basically learn more algo trading from you, where's the best way to reach out to you?
Okay, you could reach me like through Twitter, through Instagram, or maybe Facebook, or yeah, maybe through you. I think it's the easiest way.
Okay, thank you, Calvin, for being here, and thanks for sharing all your insights and actual trading strategy that our viewers could use. So, as Calvin mentioned, you could check him out on Twitter. But coming out next, we also have more show lined up on Roxom TV, so do stay with us.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin! Come on, little buddy! Bitcoin!